Okay, testing. All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. I apologize for my voice, a little bit of allergies I had over the weekend when I was in South Florida. I went to go visit my wife's best friend, and she had a cat in the house. So super allergic to cats. I'm allergic to dogs too. So it isn't the best. Certain dogs, not all dogs, but I apologize for my voice. I've been kind of battling allergies, just spitting up all mucus and all that stuff. Oh, craziness. But at least I could talk yesterday. I could barely talk. So at least I'm on the right path where I'm going to feel a little better. But the market doesn't stop for me, and nor should we. Let's go ahead and rock and roll. The Dow's down to 174 points this morning. NASDAQ down 0.61. S&P down 0.73% at 4103. Russell 2000 down 0.85%. Crude oil 94.20 a barrel down 4.43%. $3 a gallon for gasoline futures, $3.61. 3%, 3.61% down, excuse me. 1788 for gold futures up 3.37%, silver futures up 0.31%, 2026. Euro dollar pretty much flat, 102.31. Dollar yen continues to slide. I wish I held that short, 132.04, doing very well to the downside, at least what we expected. Bitcoin is down 23,155, down 3.48%. Ethereum 1656, down 4% this morning, and copper down about 0.41% at 355. 10-year yields, let's go ahead and break that down. 10-year yields right now, we are currently trading at 2.658%. Again, we still have that head and shoulders formation. We expect to continue to weakness down at least until 2.562. There's a gap to fill there. So we'll see and keep an eye on yields if they come down. That's good news for home builders and mortgage brokers. So again, keep an eye on the home builders like Lennar, KB Homes. There may be some kind of opportunity there. I don't really trade them much in terms of options, but in terms of like a Rocket mortgage companies, they're going to do a little better with lower rates as mortgage applications should go up as the 10-year has fallen. Dollar yen, excuse me, Dixie, which is the dollar index. Right now, that is trading at 0.10560, 0.28% to the downside. We actually have on the 4-hour chart 105 right here as our support. We're going to bring up the hourly, a little more short term. Again, 105 is what we're looking at to the downside. That's our target. I'm not short the dollar at all right now, but again, if we expect equity bulls to continue, then you need to get to 105 or so. If it does bounce, then we expect the equities to bounce as well. How about the volatility index this morning? Bouncing up, very nice gap up now at 2290. We are now above the 50-day moving average. So again, nice spike in volatility. Let's see if that does hold. The main thing here today I really want to go over, guys, is S&P futures. So let's go ahead and bring this up on a 4-hour chart, kind of give us the full broad spectrum here. Really what we're looking for is right around 4157. And why is that? Because that's the high point of this megaphone setup. And you could see it has just been holding and holding and holding, right, just kind of just tapping. But we're rejecting now, at least on the future side. So 4157 is a level that I'm looking for a break, and then 4186 if we continue higher. That'll get us to levels we haven't seen since the end of May, beginning of June, where we just kind of just stalled, stayed there, and then we fell down to the lows back to in the first couple of weeks of June. So again, let's keep that 4157 on your watch list. We'll go ahead and zoom in a little more. RSI is coming down, at least on the hourly, so not really much to think about here. Let's put an alert here. This is where I have my alert on S&P futures. It's right at 40.75. If we break that below, then I definitely want to go ahead and start looking at shorts. Now, I don't want to just short here, even though we're rejecting. Again, we want to find at least confirmation. I don't expect too much movement. We do have a lot of news. We do have some earnings. The big earnings was last week. We have non-farm payroll report on Friday. We got some ISM manufacturing. But again, so much volume came in the last couple of days, the last 3 days in the market to the upside, that I expect at least some kind of buyer pause. Not saying a complete straight shot down, but again, at least a little bit of a pause of buy. If we get there, maybe 40.75 would be great. That'll get us back to levels we haven't seen since Thursday at close. So again, if we break down below there, then we could start taking a look at some opportunities on stocks that have soared with the market, Apple's and such like that, Nvidia's, AMD's, the semiconductor index, SMH, has continued higher and has done very well with the market. Again, as people are taking more risk, you do have a resistance. This is SMH, the complete ETF for semiconductors. Right around 250 seems to be a resistance. So we may have a little more as we're above the 100-day on what is it? Semiconductors. How about S&P spot? Right above the 100, same thing as SMH, kind of close there. Again, we still want to get above like 41.77 on spot. That's the spot price for S&P, not futures. 41.79 is your top there, looking like a top. But again, broke out of this downward channel, and again, still continuing or above the 100. Above the 200 is where I would say, okay, the bottom is in, but we're not as of there as of yet. So again, not tons to look at here. Again, taking a look at the dollar, taking a look at yields, same thing over and over. Dollar's kind of giving us a little bit of insight, at least on the hourly. VIX is spiking as we saw a little gap up. Maybe we filled that gap here to the downside here around 21.49. We filled this gap here as well. And of course, 10-year yields, we do have that head and shoulders formation. We expect a little more downside. So let's go ahead and answer some questions. John is asking thoughts on Apple calls this week. Good morning, John. Let's take a look at it. Apple this week, again, now there's a green trend line that I set up. And again, it's a green trend line that we have kind of bounced and bounced and bounced above since COVID. So you could see that has been holding up. Now we're back above that. Again, so not tons of edge here where we're expecting to continue higher. Again, it's going to move with S&P futures. Apple just announced a bond offering to pay for some dividends and stock buybacks. So again, maybe we get above 163. That would be a nice play. If we get above below 157 or so, then I will start taking a look at puts. I'm actually looking forward to shorting this market, to be honest. Again, we've had such a run up now. And again, I hope that we go higher, but again, we're kind of running out of real estate here unless we break out. And we did wick above that, 41.44, towards the tail end of the session, and then we came back down. And you could see that we're bouncing back above the 50-day on S&P futures. If you guys just want me to remove this to make life easier, that's totally cool. Let's go ahead and apply that. And you could see a little better now, kind of bouncing off that 50-day on the hourly of 40.97. Good morning, everybody. Good morning. So the main thing I want to talk about today, guys, is really, listen, last couple of days, last couple of weeks have been excellent. You don't want to give anything back. The stock market is a money machine, but it could take money from you too. So again, let's take a deep breath, especially with all the movement that we had to the upside. Again, we could start retesting some levels. Maybe we get to 40.80 for a little bit, or we continue higher to 41.57. Right now, there just isn't any edge. Again, the VIX is up, dollar is down. It's nice. VIX is up is not the best. 10-year yields kind of flattening. Take a look at crude this morning. Again, crude, maybe we get to 90 and I get to add a little more Chevron to my position. Again, I'm okay with lower gas prices. I'm sure you guys are. Again, we might be getting peak inflation. I put in a nice piece up from Carl Quintanilla from CNBC. That was from Fundstrat. They were talking about the Cleveland Fed's inflation forecast now shows July CPI tracking at 0.27. This is the 3.24% annualized, the lowest rate since January 2021. A collapse of 9 to 12% annualized rates seen all in 2022. So again, that's the Cleveland Fed's inflation forecast. Here is the actual setup, and you could see that July is set to fall. So have we hit peak inflation? Well, let's see. If that does, then we expect rates to come down a little bit. We expect oil to come down. We expect commodities to come down. So again, some good tailwinds for us, sure. But let's go ahead and confirm. The saying goes, trust but verify. That's always what we want to do. We want to trust the news, trust the reports. But we want to verify first. Let's answer some more questions. Good morning, Carlos. Do you think Goldman Sachs and JPM will continue higher? I own both. I love both. Again, some great price action. But again, it's tough to say since we've had so many stocks go higher. Now, in terms of the daily on Goldman Sachs, if we can get above 351, that'd be terrific. That would be above the 200-day moving average. We could throw on some lines on the screen to show that We're definitely getting that nice breakout, very similar to ES. And you could see here, and not the best chart, I could just set up this way. And you could see kind of that downward channel break out of it. Again, we could always retest that 305 level as well, but 351 is my target. What I want to go long here, well, let's keep an eye on the banks. Again, you can see they're fading a little bit. So again, I'm not one to just jump into this trade right away. How about Tesla? Tesla was up or is up after hours. We did have the 950 calls for last week. We did close it. If you guys have runners, you guys are gonna probably bank on it. Let's take a look at Tesla as well. And again, look at that 200-day right at 909. We're about $6 away. And that 200-day moving average, guys, that's a pretty big level. I mean, that's pretty key. You're talking about higher than the movement of the last 6 months over the last 6 months. So again, averages are moving higher, which is strong price action. In terms of JPM, JPM is underperforming Goldman Sachs. There is a couple of gaps to fill to the upside. There's one right here, right around 125.27. If we can go and break above that, I would want to go ahead, at least above 120. I would take a look at possibly the 125s, or if not, above 122 to fill that gap. Again, all we are doing right now in JPM is pretty much just basing, creating a base. Maybe we can go higher. Maybe we could continue to the downside. But again, taking a look at here, Goldman is a better chart. JP Morgan has a little more exposure to consumer banking, but you could see 105.54 is my target to add some more. Thoughts on AMD with earnings tomorrow after market on was it AO? Oh, there you go. Now we're breaking down on dollar yen. Taking a look at AMD, see the daily here. We do have the 100-day moving average around 95.09. I want to break that first. If that does break, we could possibly play calls as a run up into earnings and just hold a runner for it. We've done that before. We actually held share calls as Apple reported earnings. So it does work sometimes, not all the time, but we've done pretty well. So let's see if AMD can get out of this downward channel and then break above this 100-day 95.09, and then I could target possibly the 99s or the 100 ahead of earnings. They report earnings after the bell tomorrow, so maybe we can catch a little snack on AMD. ON or on, this is on semiconductor. They reported earnings, but they are down after hours, and they did beat. So it isn't about the numbers. It's all about what the post movement is. It's all about the price action, not the number. Let's see what to expect in the coming months with the recession numbers. Well, I think that the recession, I guess, let's say the expectation of a recession finally came in. But keep in mind, guys, yes, we are in a recession, yes, right now. But again, those GDP numbers can be revised. They're not the final GDP numbers. The last thing I want is people to be short, super short, while we get a revised GDP number up and then we soar. So again, let's take that GDP number for face value. Again, we have some labor numbers coming. We have some ISM manufacturing numbers coming. The ISM manufacturing numbers, if they come in below 50, that's contraction. Again, maybe more of a Fed pivot. If labor market cools down and we lose jobs, again, maybe the talk of a Fed pivot or Fed rate cut or a pause can be in play. So again, I think if you notice, right when we announced that recession is coming, the market has soared. Why is that? Because it's finally done. It's kind of like saying, we've been expecting this for a while, Wall Street. Now that it's finally been said, that was kind of a buy signal. Interesting enough. So again, we don't know how that GDP will be revised, if it's going to be revised up or revised down. So we can only look at the news that we have in front of us. Again, we have let me go ahead and Forex Factory and see what's up, and we'll go over it together. All right, let's see. All right, we got ISM manufacturing today at 10 a.m. The expectation is 52.3. We also have final manufacturing PMI at 945. You guys can see that. We have Jolt's job opening tomorrow. We have Bullard speaking tomorrow. We have services PMI on Wednesday. We have Challenger job cuts, unemployment claims. Messer's going to speak as well. And then we have the big one, non-farm payroll. So again, if we still have a strong labor market, the Fed is going to keep things as is. So we kind of want bad news in a weird way. We kind of want jobs lost. I hate to say that, but if you're a stock market bull, that's what you're looking for. A strong labor market would not be helpful. A strong labor market would not coincide with a recession. Can't have a recession when you have a 3.6 unemployment rate. And that would be the first time in history if that happened, honestly. So again, it doesn't coincide. Sometimes you could think about economics as just grabbing the textbook and just tossing it because the the numbers change daily, perspectives change daily, and that's how we have to go by. So again, the GDP number needs to be revised. Let's see if it revises. If it stays the same in a recession, so be it. Okay, we could either have a long, prolonged recession or the fastest turnaround in history. I mean, with a 3.6 unemployment rate, if we are in a recession and that's official, it more than likely will be the quickest turnaround in history because the big deal for consumers is that do you have a job? Can you buy stuff? How do you buy stuff? How do you take part in the economy? More likely need to be have a job or live off investments or be a business owner of some kind in order to take part in commerce. And people are working. Granted, inflation is high, but we already saw that the Cleveland Fed is looking at a forecast of a lower rate. So maybe things are getting better. Again, I'm not completely sure. I don't want to sound like I'm sure. I'm going just by daily here. I have not bought stocks just because. Again, I'm going to wait and see if we get that gap to fill to the downside right around 3,700 SPX. And I'm just going to trade this. I mean, at the end of the day, if we're going to go higher, so be it. I'll trade it to the upside. But in terms of investing, again, I sell my stocks. Again, it's a wait and see approach. Um, the employment number this week will be pretty big. So again, if we have bad news in terms of employment, that's going to be good news for stock market bulls. If we have a great jobs number, that might be great politically, but not great for the stock market. No, that means the Fed still has more to do because labor pressures add to inflation. The more you're paying your staff, the more it's going to cost you. The more you have to pass that cost to your customers, and then that raises costs. Inflation goes higher. Same old, same old. We'll go and leave it there, guys. Have a great rest of your afternoon. I'll catch you guys for the aftermarket recap, 5 p.m. Eastern Standard Time here on the YouTube. I will catch you guys on the blog on Discord. As always, if you want to join us, garcapitalfx.com is the website. More great things to come. Have a good one, guys. We'll see you soon. Cheers.